Okay, I'm recording this video after the close of trade Monday, the 19th of April 2010, and I forgot to post the latest commitment of traders numbers on the website on the weekend, so I'll just run through that chart really quickly here. The professionals are currently net short 0.6% of total open interest. That's on the SP large contract here. So that was the reading for last week, and we've just had the oscillator roll over. Just bear in mind this includes Mondays. This last bar on this chart includes Monday's trade, so we're really just looking at this value for the oscillator, which is 127, positive 127 at this value here. So we've just kind of rolled over the last couple of weeks. So we've got not a great deal of kind of shorting by the professionals at the moment. The oscillator has rolled over. We did have the crash warning signal a couple of weeks ago. And these things don't always work out, and they certainly don't work out kind of immediately anyway. But I'm just going to run through a couple of things. First of all, the 4500 tip bar chart. I've been talking a lot about this over the last couple of weeks, but I did note on Friday that we had exhaustion selling at the close on Friday, and here's what the chart looks like over the last few days. This is the run-up that we had on Wednesday, the topping out, the run-up with the exhaustion buying at the end of Thursday. I beg your pardon, the end of Wednesday. Thursday we had the topping out activity where we were just kind of working off a divergence pattern there, and then we had the sell-off on Friday. Friday ended with exhaustion selling, and I was looking for some kind of a bounce on Monday, and we got that right around midday here after we'd had another exhaustion selling signal on the downside. But again, just using the 4500 tip bar chart, this is really helpful just to get a sense of the trend direction. And for trend changes, what I need to see is divergence patterns on better momentum, professional activity, and a cyclical turning point. And in the beginning of the day, we kind of had a perfect setup for me here. We were going into this turning point with stopping volume signals on the volume distribution signals there. We had professionals taking profits with these blue bars into these new highs. We had amateurs right at the very top getting wrong-footed there. We had divergence buying pressure, and we'd had a cyclical turning point, so we were kind of looking to make a rollover at that point. And then coming into the low for the day, we had again exhaustion selling on the downside. We had the bullish divergence patterns setting up. We had these volume accumulation patterns. We had a Rambo pattern here showing that this was amateurs selling these kind of new lows for the day. That was likely or possibly could fail, so we're looking for signs of failure, and we see that when we have the professionals step in right after that with two blue professional bars at these lows. We have profit taking. We retest the lows again with the amateurs right at this point here, exactly the wrong point to be expecting kind of new lows. Had very little selling pressure at this point. You can see better momentum was showing a zero kind of reading for selling pressure, so that just shows that there's very little interest on the downside here. That allowed us to rally from that point on. So and if you do own the better sine wave indicators, when we're seeing these little overshoots like this where we get some kind of turning point starting to signal here with professional and amateur activity, and at the lows here, once we've just overshot some cyclical turning points, look at the next time frame higher. So the next time frame higher from the 4500 tip bar chart is a 13,500 tip bar chart, so we just multiply by 3, and you can see those were cyclical turning points in those time frames. So just a kind of a useful rule of thumb, if we're looking for a potential overshoot where it might get, in my terminology, I call that being caught after overshooting, the next highest time frame, the cyclical turns in the next highest time frames are good points to look for those turning points. And you can see here on the 13,500 tip bar chart, the low in the overnight session was an end of trend warning signal, and then the low for the day was a second cyclical turn after an end of trend warning signal. And I'm in all time frames, this I find really useful just to signal where the lows are, and just to lows and likely trend change point. And to illustrate that, I'm just going to show you my 500 tip bar chart during the overnight session. So going back to what was happening setting up the open, we had this is the open with a red vertical dotted line Monday's open. In the overnight session leading in the hour prior to that, we had an end of trend warning signal on the downside, and then here's a second cyclical turn after an end of trend warning signal. Happened on extreme selling at that point. We had professionals selling down at this point, and so getting long and taking profits on any short trades at this second cyclical turn after an end of trend warning signal. And then for that hour before the open, we just bounced around this 2-point range, and you can see it's quite unusual to see all of that professional activity taking place on the 500 tip bar chart there, and that allowed us to then start rallying for the morning session. We had another exhaustion, kind of selling downside signal here, professionals stepping in, and whenever we retested those kind of lows, that was significantly less selling pressure. You can see there with these bullish divergence signals on better momentum, showing that there's a lot less selling pressure going on here. That allowed us the market to rally. We rallied into these highs. Again, the first turning point happened. It was just a tick past a second cyclical turn after an end of trend warning signal. You can see there was also, we knew coming into this turning point it was going to be significant because we'd had exhaustion buying at that point and the professionals coming in there. The second bite of the cherry here was amateurs leading that charge. That was likely to fail. We came back to test. This second test is all being led by the professionals here with these professional bars going into those highs. It's an exhaustion buying signal at that point, and then the market drops away. And effectively you're seeing that in the higher time frame chart here on the 4500 tip bar chart. The first time we came into these highs professionals, second time we came in was amateurs up here. Down at the bottom, the low for the day, this was professionals coming in and getting long and taking profits on short trades. And then the second time we came back in, these are the amateurs kind of down here at the lows, and that's likely to fail and reverse the other way. So whether you call that a double top, kind of here and here, again, I've talked about this before, kind of professional and amateur activity at double top kind of levels can often signal which direction the market is going to go in. So there we go. That was just a recap of some of my charts today, and I just want to just note on the website, had a huge amount of interest over the last couple of months in the indicators. I'm so pleased that so many of you have chosen to pick up the indicators. I hope they're kind of reasonably priced, and if you're having any kind of problems installing the indicators or getting to look like my charts, particularly if you use TradeStation, I've put this on the website. It's a page called, it's under the Emini Trading tab at the bottom here. It's called Duplicate My Emini Charts, and when you go to that page, it's got a quite extensive, I think it's about a 15-minute video, just stepping you through absolutely step by step from the very beginning of how to load up the Emini tick bar data, make sure that's correct on your charts, and then loading each of the indicators one by one. I'll show you exactly what the settings are, and then I've also kind of just giving you some screenshots and instructions for the particular settings that I'm using. Just out of interest, this vertical line that I use just to mark off the beginning of the day, it's incredibly simple code. You can go download it just following this link on the website where it says vertical line time. Just click on that link. That'll give you the .eld TradeStation easy language file there, so you can just use that code. Nothing fancy there at all, so just a useful indicator to mark the beginning of the day. So there we go. That page might be of interest to you. Please bear in mind, with different trading platforms, tick data looks different across different platforms. I'm pretty happy with the TradeStation platform, and the tick data is complete there. If you're using interactive brokers and their tick data, it's really not good enough. Check the website again under here for tick charts, trading with tick charts. There's a note about interactive brokers and tick data there. The other trading platforms are going to have kind of different tick data. So if you're trying to match up kind of bar by bar versus my tick data, and using different platforms, you're going to find some difficulties. But anyway, I hope that's useful to you. I hope your trading goes well this week.